Well, thank you for coming and welcome to our session today on demystifying real assets tokenization. For those of you who don't know me, my name is Natalie Breen. I'm at Apex, based in London, and I lead our strategic real assets business globally on the strategic development side. And I'm joined today with Sanjay Vasta from Inveniam and Rachel Chia from SDAX, and they will shortly provide a bit of a presentation and a bit of background. Well, first thing you should know is I've got the lowest tech ability in the room, so I will not be lecturing or educating you on tokenization. But what I will say, and from a global perspective, is this is becoming more and more topical globally. I think a lot of you know that I used to live here for a long time, and I do think Singapore is much more proactive in adopting some of the new technology, and I think Singapore will ultimately become one of the key hubs for tokenization. We're also doing quite a bit in Bermuda, and we're seeing quite a lot of Bermuda funds getting done. So Bermuda is where you normally go use that forum if you're coming out of the US, for instance. And in London, we're also, there's an exchange that's been set up. And there are other exchanges in South Africa. We had inquiries this week about a fund looking to tokenize out of there. So more and more, we're talking where our clients are wanting to understand more about this sector. And I think, congratulations to you all, because actually you're in the first mover camp by even coming to this session. And I think whether you're an investor, whether you're a fund manager, whether you're a financier, the reality is your clients are going to want you to have an answer on whether this is something you're going to look at and or not, and why not. So I think that's the purpose of today, is really to give you a bit of an overview. I was just going to quickly just say a few words about by Apex. Is this? No. Oh yeah. Oh, okay. So just the format. What we're going to do is I just wanted to say a few words about Apex Group and what I understand the benefits of tokenization are from a low tech perspective. And then we're going to have Rachel actually go through. So Rachel is a Chief Regulatory Officer and General Counsel at SDAX. She's going to go through the building blocks of what you do, how a whole tokenization transaction works. And then the key to tokenization is blockchain technology. So we have Sanjay Vasta here, who's the president in Inveniam, to go through what that solution is, followed by a bit of a panel discussion, and a chance for you guys to ask questions as well, and then a networking break after. So just a bit of a delayed. Okay. I'm not going to go through this. We'll distribute this later, but needless to say, Apex, fund administrator, corporate services, a whole lot of different bolt-on products, and we can talk to you about that separately. In relation to real assets, our total assets under administration is 3.3 trillion USD. In relation to real assets, we have about 400 billion USD. So really big player in this space. Oops, that's what I wanted. Let's go back. It's a bit delayed. Where am I getting? That way. So from my perspective, what I understand, and we'll test this theory with our speakers, is really the benefits of tokenization. The first one is liquidity. So being able to tokenize an asset and create, in the instance of real assets, liquidity in relation to that asset, which is then accessible and tradable, and allowing for, therefore, increased efficiency in the market. I think one of the key points is the next one, accessibility. Probably one of the biggest things of importance to real estate investors and why you look at tokenization is it does allow you to fractionalize property. So it means that if I just had one building, I could actually buy a piece of that building by tokenizing the asset itself. And the benefit of that is that it allows the retail investor to participate in an institutional asset, which was really, that opportunity was really only available to institutional investors generally and high net worth. So it allows kind of the unserved, I think there's a number Rachel quotes, 68 trillion USD, to actually access assets that previously they weren't able to access. The use of blockchain technology is key, and that increases transparency and efficiency, and Sanjay will talk about that, and reduces the cost again, and that's the important factor, is you can get access to a market on a reduced cost basis. And it also allows for cross-border transactions, global reach. So you may end up listing your product on SDAX, as well as maybe the UK one, Archax, etc. So there's a way that you can actually get global reach on this. We'll provide this, but the point is we have a full solution which we are currently have put together. We have invested in Inveniam, we've invested in Tokenisation. So as far as an Apex solution from a fund admin, we have the whole end-to-end, and obviously Rachel and Sanjay and their businesses are also key to that. Again, we'll at any time you want us to talk through this, we have a whole team that specializes this on tokenization and how you do the fund admin, the onboarding, the ramp off, funding off and on, etc. And I can put you in touch with that team. Right, that's enough from me. So I'm going to hand over to Rachel. Thank you, Rachel.
Sorry. Thank you for having me here today. Very glad to be part of this panel. So just talk a little bit about real estate tokenization, which is, so I'm just picking on one of the points that Natalie made. One of the main reasons we are looking at real estate tokenization is the issue of accessibility. So normally we have buildings, let's say 100 million building. It's traditionally only available to be invested by large institutionals or a band of big family offices banding together. But using fractionalization, tokenization is the enabler of fractionalization. Fractionalization actually is not new. We've been seeing retail products in very small denominations, but now with blockchain and tokenization, we're able to enable fractionalization in a more efficient way. So with tokenization enabling this fractionalization, we can now break the ownership of the building down into, let's say, 10,000 tokens of 10K each. And now you have a whole, you've now opened an entire wallet of individual investors that were not previously accessible. I'll talk a little bit about how we tokenize a building. We're not actually tokenizing the building itself. In the Singapore context of tokenization, this still has to be done in the form of a security or a collective investment scheme. So what happens is that the building would be put into an SPV or a corporate vehicle, and then we would tokenize or fractionalize the shares or securities. Could be a debt security as well, or fund units in the fund. So I mean, this is just a chart just to show you how we're really just at the tip of the iceberg. The real estate is 340 trillion in a whole total traditional asset value of 1,200 trillion. And you can see from that, that pie chart that only 2 trillion has been digitized. We're at the tip of the iceberg of adoption of this. And that's why SDAX is excited to be in this space. So yeah, I mean, there's an expectation of 1.7 trillion of real estate will be tokenized by 2025. I mean, you will see from a lot of the competitors and people in the space that there's been a very exponentially growth in the adoption of this. And even in the next 5 years, less than 1% of real estate will be converted into digital token format. So there's a huge potential for this. And real estate is a very good asset to be primed for tokenization, simply because it's high barrier to entry. No one can buy a building easily, but by fractionalizing it, you are then creating the accessibility, you're lowering the barriers to entry. And because of how platforms like ours work, we are now also creating the secondary market liquidity for an asset that did not have this traditionally. Yeah, so this is just another chart just to show that, you know, exponential growth. Private markets have been growing 2 to 4 times faster than public markets. So this is just other data points which we'll share the slides around to support our thesis on this. So the problem with private markets now is there's a very mismatched landscape. There's very unequal access to capital and very unequal access to investment opportunity. Right now, only the big boys are able to play in this. You have well-established companies that have access to all your merchant banks and your service providers, and on the other side, you only have institutional investors, ultra-high net worths, and very large family offices that have access to these good quality assets. But that's just a slice of the market and the total addressable market that's available. Tokenization is trying to seek to address this. You will hear the word democratization banded around a lot. Actually, that's also just a fancy word for saying we want to reach that digital distribution on our competitors. We ourselves were in talks with them. So I'll just go through a brief overview of how tokenization works. So you take the underlying asset. It could be a fund asset. It could be a fund unit, or it could be an underlying asset, which, as I said, would need to be put in a corporate vehicle, and then it would be the equity, or could be a secured debt or asset-backed security that we then put onto a blockchain. So as I said, tokenization actually is just a fancy word for saying we are using blockchain technology to record certain things. So blockchain technology has gotten a bad rap in the past because it's crypto winter. People just think of Bitcoin, FTX, and stuff like that. But actually, blockchain as a technology is very useful because it is a secure way to store information. It is a secure way to record transactions, and transactions can be recorded in real time. So unlike the traditional kind of markets where you have T+2, T+3 kind of settlement, on blockchain, transactions are settled immediately. It's instant, right? We have literally T equals 0 kind of settlement. And because of how blockchain works, there's no limit as to how small you can make the tokens. They can be as small as 1 cent. Usually we don't, on the SDAX platform, we don't usually go down that low for various reasons, but there's no limit on blockchain as to how you can create the kind of size and the functions of these tokens. Also with smart contracts that you can build onto the tokenization layer, there are a lot of efficiencies that can be created through that, which traditionally were being done by a lot of agencies or middlemen. So you would put that information of the asset or the fund units onto blockchain. And then these are, so then the tokens are then issued to investors, and this is kind of like the means of distribution. So as I said, tokens are really just a fancy way of saying we're using blockchain to record ownership. What the tokens represent is actually the underlying asset or the ownership in the fund unit. That legally or structurally does not change. We're just using the digital technology to ease the recording of these ownership interests, and also to facilitate the secondary market liquidity. So just using SDAX as an example, we have 2 licenses. We have capital market services license, and through our capital market services license, we we perform KYC of issuers and investors. We do deal origination. We help to structure a deal. And then this is being distributed to retail and accredited and institutional investors. This is then also listed on an exchange so that these tokens have price discovery, liquidity, and a trading platform. Okay, so this is just one platform, which is SDAX. Where it gets really exciting is the global interconnectivity that has now developed. So SDAX is plugging into the interconnectivity globally. There is now technology. One of the providers that SDAX has signed an MOU with is called Onera, and Onera have technology to create this interconnectivity. So we will have assets on different blockchains, right? It will be on SDAX blockchain, or it will be on different blockchains. It could be a public blockchain or a private blockchain. There will be different types of distributors: asset managers, investment banks, securities exchanges, and so forth. And then those distributors then connect to the different types of investors globally. And this fin2p, FinP2P is just one of the examples of interconnectivity platforms that we're using, but this is what's being developed in the world right now. So from one exchange and one platform in Singapore, where we are producing products and we have investors on board, we are now connecting to exchanges such as RChex in the UK or Oasis Pro in the US, and that's where we see the exponential growth. So from a product being piped into a platform in Singapore, you now have this potential of reaching the global markets. So yeah, this is just a map of the kind of ecosystem that has been developing. It's still slightly fragmented, but you will see the links getting stronger and stronger in the next few years. So on the left side, you're seeing the kind of product producers that are linking to this. We have JP Morgan, who has invested into platforms like Onera and I think Archex as well. But you have Aberdeen, you have Goldman Sachs. All these big players are now investing into and looking quite intensely into digital distribution, because this is where they see the future. Hamilton Lane is a big proponent of digital distribution for funds. KKR, BlackRock, and then on the right would be the ecosystem kind of participants like even in Singapore with quite a few. We have SDAX, we have SDAX, and yeah, obviously my partners here like Inveniam and Apex are all very key participants in this global ecosystem that we're all trying to build. Okay, so I'm going to hand it over to Sanjay to talk about why we should tokenize.
So I think I have to give full disclosures. First of all, Apex is a institutional investor into us in Inveniam. So, thank you very much for that. And because I come from New York, so I have to give disclosures, right? So, and then we have a agreement with SDAX in place, just like we have with other digital asset exchange. We see them as trusted partners. So why tokenize? And I think secure, you can read all these words, but I think I'll give you the simple word on this. First of all, if private assets were to follow the public assets rails on how public assets work today, you'll never be able to get private assets to a common person's hand. That's one. The second thing is the trust factor in private assets is lacking. And that's what blockchain helps you to do. And that's why tokenization of a security helps you to do. Rachel and Natalie talked about democratization of alpha. That is, you're getting people who could not participate in those assets to participate in it. But what's the most fundamental important other than secure, seamless, speed, transparent, liquid, cost-effective, fractional, immutable, and trustless is the aspect that now you as an investor who's holding a token can optimize your value proposition on when do you want to get out of that investment, as opposed to the asset optimizing on their own digital rails as to when they want to get out of that asset. So today, if you were to invest in a private asset, you have to go in and put money in, but you do not get your money back until that asset, there's something happening on that asset. You're linked to that asset. Tokenization is a way to de-link it. And when you de-link it, that becomes fractionalization, and that's now become tradable, accessible, and the immutability comes through the blockchain, because a token is a token. It's remember, we don't talk about security token, and I think Rachel touched on that. We talk about tokenization of a security, right? You take a building, you create a security out of it, and you tokenize that. It's a digital representation of a security that actually then follows the digital rails. So all the elements relating to middleman go away. All the element of transfer is very thing. You can do atomic settlements. You don't have to wait 3 days in settlement. When the settlement happens, it's like a binding contract. We'll hear about smart contracts. The cash and the security can move at the same time, so you're not looking for someone delivering to you. So all those elements get very efficient. I think I have to press this button to go up front. Oh. Did I go back? Oh. So Inveniam, think about Inveniam as a business that actually helps bring transparency to the underlying private asset today. So we, through our patented technology, we are one of the top 10 patent holders in DeFi and blockchain. We have two philosophies we believe in: that the private asset data is never going to be in one place. It's going to be scattered all over the place. And the second thing is that the private asset owner is not really willing to give you that data and transfer it to you. So what we do is, through our technology, we connect to all those information bases wherever they are, structured, unstructured, PDF, non-PDFs, whatever they are, and we make that data actionable and present it to you in a deal format. So you have complete transparency on that asset, 360 all the time, And by having that transparency, you can then decide who gets access to it. So we believe that trusted data, i.e. connecting to the place of rest where the data is, and through blockchain ensuring immutability, i.e. if you even change a pixel on the data, we will be noticed that the document has changed. If the document has been changed, you can double click it and show you all the action item, who went in. So the full aspect of traceability, auditability brings confidence to people about the asset. We believe trusted data can result in better valuations, because now you have, instead of people spending 80% of the time collecting data, that's all digitized. They can now focus on the valuation. So when you do tokenize, right? So if you really look at it, that's giving you transparency on the asset today, and you can do better book to loan value, you can do better risk management, all those elements. Now, should you, and Inveniam prepares you for the digital age, should you decide to tokenize, through smart contracts, we can inform the token with the book value of that asset. So today, there's something known as DLOM, discount because of lack of marketability and transparency. Usually on the private assets, it's between 30 to 40%. And this is not my research, this is by Journal of Finance and Economics and everyone else. What we do is, by bringing trust and transparency, we basically cut that DLOM down by half, because now you've got transparency on the underlying asset. Hence, your token has a value, a book value. You'll, of course, it will trade at demand versus supply, right? But at least if you have a foundational value, people know what the benchmark is. And of course, then it results in more liquidity, ability to trade. So I think this is where we are. We are the data operating system for private assets globally. That's what we are. And we are now connected to all the digital asset exchanges and everyone else. So this is all our, I'm not going to go through this, but these are all our use cases that we are live. So, you know, people talk about blockchain, and of course people, and it's very, I'm very happy to know in Singapore, people don't talk about blockchain and Bitcoin in the same line, right? A lot of people do that, but blockchain is just like internet. It's a technology, right? Which gives certain features. DeFi is a technology that allows you features. What we do is we leverage blockchain in a very intelligent way to commute trust, to commute immutability, because that way you can be assured that the document has not been changed. If it's been changed or the data has been changed, you will know what has been changed. And I think that brings proof of value, proof of state, proof of process. So we focus on proof of value, proof of state, proof of state, proof of value, proof of process. That's our fundamental perspective, and I'm not sure why these things went up and down, but that's probably different PowerPoint versions, right? So this is the ecosystem we built. I think Rachel touched on it a little bit. Thank you, Rachel. But I think if you really look at it on the left side, is if you look at Inveniam, we are the proof of state, proof of value, proof of process. So think about us as a digital rails. So there are two elements in any trade you do. There's the investor element and there's the asset element. We are in the asset element where we provide complete proof of value, proof of state of that asset at all times by connecting to the source, and you can trust it because we are using immutability through blockchain. Once you do that, you can then provide it, and once you mint a token, we talked about Tokeny. We own 22% of Tokeny. We sit on the board of Tokeny, but we've got others. We are totally agnostic to anything, and SDAX should be in a few more pages. That's my fault. So, but basically, we are agnostic to tokenization. We are agnostic to the exchanges. What we do is, if you do tokenize, and one of the things Rachel mentioned, all the announcements come out, Goldman Sachs, we're working with Goldman Sachs, they made an announcement recently. And they made an announcement that they're going to do tokenization. So we'll talk about it a little bit when I go on to the right-hand side. And what happens is, through the process, we can now, it can be listed on the various, the chart that Rachel showed, the interconnectivity. Onera is a partner of us, Fin P2P. And if you look at it, those are all liquidity pools that you can put the token on. So, today if you have to go, you have to do GDRs, you have to list it in 3 exchanges. Once a token is there, the listing becomes very easy. Now, of course, we're in the starting point, so every exchange has its own rules, but we have workflows capability that can actually initiate the onboarding of that token in those digital asset exchanges, and we can give them all the data so that they can meet all the compliance requirements. And then we do continuous monitoring that nothing has changed on that asset, so that it doesn't throw them out of the regulatory framework. So that element of it brings trust and transparency and instant, I wouldn't say gratification, instant access to information. On the right-hand side, if you see all the digital asset exchange, and I'll draw an analogy. If you go back, I guess some people are much younger, but when internet came out, so I'm like 90 years of age. So when internet came out, when you were trying to do emails, we had VPN connectivity, remember? Internet was there, we built our own tunnels, right? And we started connecting to the VPNs. Then after 4 or 5 years, that went away, and now all your email goes through internet, right? But it's in a secure fashion and everything else. If you really look at what Goldman Sachs is doing, what DBS has done, what Citi is doing, what they are doing is they've come to a conclusion. Digital asset is going to take off. Private asset tokenization is going to take off. They've concluded on that. Their clients are pressurizing them. I was talking to a vice chairperson of Citibank the other day, and they said, our clients are saying that 35% of our allocation will be in private assets. You better get your technology ready so they can handle both public, private, and tokens. That's what they're saying in the next 3-4 years. So they're all realizing it. But what they're doing is they're doing the VPN kind of a solution. They're doing a walled garden. So Goldman Sachs, we're working with them. They will tokenize, and they will offer it only to their private banking clients, right? Because they think that's a quick way for adoption, right? But what's going to happen, all these walled gardens with Citi and everyone is putting up will be broken, and people will come to SDAX, ADDX, and other places, right, to list them. Because right now you want to make it open to, as Rachel showed, that the adoption, that the multitude of people is a lot more. So that's the way it's starting, but it's good for the industry because it is starting. So, one statistics I gave is, and Rachel will correct me on this, I'm pretty sure, and so will Natalie, is last year, there were 3 digital asset exchanges right now at this time. Today there are 11. Singapore is leading the charge on this. The banks were not even connected to this process of private assets. Now they're doing fast proof of concepts, and they are just woken up like crazy and saying we have to catch up. So it's like you're running a marathon race, and you've already fired the pistol, and people are on the 10th mile, and the banks are sitting in the station, and they say, oops, man, the 26-mile route is coming, so I better get started right now. So they're playing catch up. But this is happening. This is not a question of if. This is not a question of but. This is where alpha is generated, and a lot of have-nots, like ultra affluent people and everyone, want to have access to that alpha generating opportunities, but they do not want to be locked in to the aspect of when the liquidity of the asset happens, I get liquidity. No, they want to de-link that. So that is what the digital asset exchanges will offer. And people like SDAX, who are leading the charge on this, will actually get us there. So, our long-term objective is to facilitate the trading of digital asset, but it's a very funny 4-letter word, data. And that's what we do. We provide transparency to the underlying asset by ensuring that the data on that asset is transparent, trusted, and available at all times, even though it's dispersed all over the place. I'm not sure if I got any more slides. So anything I should have touched on which I did not?
Okay, so I get to ask the hard questions. So and then I'm going to open it up to everyone in the room. I'm very happy, Rachel, that you actually touched on the point that this industry has made up words to make us all feel inadequate. So, and hopefully the presentations that we've heard so far have given a bit more insight into what the underlying rationale is and proposition. Okay. Amazing. Right, Sanjay, I have one for you now. So I think both our speakers have touched on the benefits of tokenization, how it benefits private markets. But just to recap, what are the key benefits based on? Should I take the
Hello, can you hear me? Yes. So I think, I think it was well presented, but I think inclusivity is one. I'll say a few words. Inclusivity, i.e. you will get more people connected to your digital, to your private assets and investing into you like public assets. The other thing is the delinking of the optimization of the asset value from the investor having their own optimization path. So the delinking of that and fractionalization. I think these are the three things which are important. I can now own 10 tokens in this building, which I could not before, and be entitled to rents from this building or thing. The other thing is the flexibility, and the flexibility element is that, when you do a security, right? In tokenization, you can actually, through smart contracts, saying what this token is entitled to. It could be only entitled to the rents of the building, or proceeds of the building, or ownership of the building. So you can decide what it is, and then the smart contract makes sure it's working the appropriate way. So that flexibility is very important.
Okay, thank you. No, that's a very good summary. Rachel, I wanted to ask you a question, but just prior to that, I think, we touched on some of the exchanges that are already set up globally, like SDAX, RCHAX, etc. And what is interesting is a lot of these are underpinned by by large real asset institutional investors. So if you look at SDAX, your key investors are ESR and Straits Trading, and also PSA, the Port Authority, which is Temasek based. RCHAX, I've already talked about Aberdeen underpinning that. I see Aberdeen's over there, Ross. So we might ask you a question shortly. But also, so we are seeing the big players actually back, the big real estate players back these digital exchanges. So I have a question about what is the difference between asset tokenization and fund tokenization? And just before you answer that, would you mind just giving an overview of SDAX in relation to what your current pipeline, what the actual current pipeline is, what you've got listed there at the moment?
Okay, so SDAX is a marketplace platform. That's what we aim to be. We want to pipe in the products from a variety of partners who are producing products. So fund managers, CMSL partners, banks, even for structured products, any other companies that want to put tokens in tokenized securities or tokenized fund units onto our exchange, and also asset owners as well. So for SDC, we have just done on our platform now is a product by SDC, which is linked to real estate, high value luxury real estate property in Singapore. And then on the other side, we want to link up with partners who help us with distribution, both locally and through that map of like global interconnectivity. So what we are primarily is a scalable marketplace. We want to pipe in products and pipe out distribution. And of course, part of that is providing this exchange platform where people can have price discovery, liquidity. There are also a host of other use cases for platforms like ours. I was just discussing with the gent over there about how tokenization actually is useful for succession planning as well, because you can now delink the physical location of an asset and the ownership of it as well. So this is useful for assets such as art, or like art being quite a key one. Like just an anecdote, I spoke to a very rich gent in Zurich who was trying to plan his will and succession. He wanted to leave all his paintings, and was worth about 1.5 billion worth of like fine art to a Zurich museum. His kids wanted him to sell all of it. So, but with tokenization, you can delink. The art can still stay on the walls of that museum. We can tokenize the art and help the kids realize some value by selling down some of the art. So those are products that we are in talks with various partners on to put on our platform. We're hoping to put on a supercar token on our platform quite soon, so create the buzz, so that tokenization isn't just about like the very boring stuff like funds and private equity, but we want to do like the fun stuff as well, like art, like wine, like supercars. So coming back to the question about what's the difference between asset tokenization and fund tokenization. As I said, tokenization is just a fancy word for using blockchain to record ownership and transactions. So if it's an asset tokenization, we're just recording ownership in the asset itself. So if it's a building, as I've described before, we put in an SPV and we would tokenize the security linked to that SPV, which could be straight equity or asset-backed security. And then where it gets interesting at the fund level is that we would be able to tokenize the fund units at that fund level, the GP stake, the LP stake, stakes in the VCC companies. So that's at the top level, and at the portfolio level, you can also tokenize the different assets. So the fund itself can then hold its private property in tokenized form as well. That might help with divesting some of your portfolio in a digital format. The point I just want to make is that tokenization can work at various levels, and it's a very flexible tool.
Thank you for that, Rachel. I just want to ask, so if I summarize that in layman's terms, low-tech terms, so if I had an unlisted fund and I had a portfolio of 5 assets in it, and normally we would have units in a trust that our investors would invest in. So to make that tokenized, I basically would take those units in that fund, that would be a fund example, tokenize it using blockchain, and then I've got basically a private, unlisted, private tokenized fund, and then I could put it on your exchange for a secondary market trading.
So that becomes a listed private fund. And then that fund, which also owns the 5 assets, each of those 5 assets can also be tokenized. So let's say that fund owns 5 buildings. Each of those buildings can also be tokenized and separately divested in portions because it can also be fractionalized. So you can have,
so you can have
different layers of tokenization.
Yeah.
So I think, we have a client where actually they're doing this, but what they're doing is they've set up their own private marketplace because they're for their LPs. But now new LPs come in, they say, I want an interest in asset number 1, 7, 9, and 15. And they get a token representing those. So that flexibility element actually becomes huge, right? So just wanted to reflect on that.
Okay, so Rachel, I've got a client that is very interested in doing a tokenized fund. So how long does it take to get onto, what is the process in relation to time and cost?
The tokenization part itself, the technology part itself is very quick. We work with a licensed custodian as well, and basically our timeline for that piece is only probably 5 business days. However, what actually takes time is the documentation. Lawyers take time. So what we need to create would be, because this is a security offering or a fund offering, for funds usually you're in a much better place and the timeline is a lot shorter, because for funds you already have a PPM. At SDAX we have developed basically a wrapper, so we don't have to make significant changes to the existing PPM. We would put this wrapper on it, which would then have the language regarding the tokenization of it, the listing of it, so that it can be put on our platform, as a listed product. For stuff like bonds or shares or equity or asset-backed security, there would be obviously the offering kind of documents that we need to prepare for it, like information memorandums and stuff. Just to explain why, as a regulated platform, our obligations are to provide an organized market, and as part of providing an organized market, we have to ensure that our investors have sufficient information. So it's that documentation part that actually takes time. But even within our exchange, we are constantly thinking of how we can reduce that time to market and to make that process as seamless as possible. So we have been working with lawyers to templatize a lot of this. I have a dream, right? I have a dream where information memorandums one day can be robo-drafted, because a lot of it is actually very box standard stuff, right? What actually takes time is description of the company or the asset. Those are things which I think, look at chat GP, right? We can start using tools like that to, I know the lawyers will hate me because I used to work in a law firm as well. This is what you can charge money on. But this is stuff that we should be constantly looking to make more efficient and make more seamless, so that assets and private investments can get onto market faster.
And just on, I was Sanjay, to just elaborate just on that, on the collection of data and how you go about it.
Yeah, and I think that's a fantastic answer, Rachel. This is amazing, because it's not about the technology, it's the aspect of the compliance and the regulatory framework, which actually are getting automated as we speak. I saw someone the other day do automated fund structure setup. I should introduce you to them, right? But for data collection, I like to talk about examples. So 4 massive towers in Abu Dhabi, we were asked to go in, and they usually take 2.5 months to go through the full process of evaluation. They gave us the information on Wednesday. It's 700 leases, 200 other odd documents and everything else, PDFs, and all those various combinations lying various places. we were able to digitally notarize that within 2 days. So we were able to use our AI engine, read the PDFs, and understand the data elements that are relevant to the use case. We brought a valuation agent in because they wanted us to run the full proof of concept. We pushed the information into the models, they were permission to do that. They came out with the valuation. We went back 6 days later with the complete valuation done, which according to them was spot on to something that had taken 2.5 months for them to do. But what was more important was, and as Rachel said, the technology. We didn't go with any presentation. We just went there and we opened up the laptop. We connected to the internet. We took them to the dashboard. Here's your portfolio. Here's your 4 buildings. Double click it. Here's your rent rolls. Here's everything else. Double click it. It takes you the PDF to understand where it is. Shows you the traceability, auditability, and everything. The technology took us nothing, right? That's what we have done. We have spent the money to build the technology to make it fast and, I was going to say, furious. Fast and secure. That's all I was going to say.
Actually, just keep the mic, Sanjay, as well. So I wanted to ask another question, but just before I say that, so we're working very closely, as we mentioned, Apex is working very closely with Inveniam. We have an arrangement and an investment in them. What's quite interesting about their product, actually, is some of our clients that are looking at it and testing it at the moment on their portfolios are using it for the data collection benefits and the provenance of the data, with the future aim of potentially tokenizing it, because it's a bit of a free kick that you already so the tokenization may be a step down the track, but by using the data collection and getting the provenance and efficiency through blockchain, so just using blockchain as the actual data collector, for instance. But I wanted you to respond to that, but also could you talk about smart contracts, because I don't know what that is.
So yes, I think what we're doing is we are preparing the asset to be digital ready on the digital rails and available for tokenization. As we said, tokenize any asset, any public company, and wherever you go, there are 2 elements to it: the asset and the investor side. Exchanges handle all the investor side. The assets what get listed, but they're handling all the investor side. But if I can give you transparency on the asset all the time, then your token will have a better liquidity and everything else. So that's one aspect. On the smart contract, think about smart contracts as lawyer automation. No, I don't mean that. So think about agreements that are automated, right? So if then statements and everything else is a smart contract that's approved on the blockchain technology, where you and I agree to do something. If you do these 5 things, I will take your security and I'll give you a payment. That gets wrapped into a smart contract. And when it gets wrapped into a smart contract, it's a digital agreement that automatically executes without anyone prompting to do it when certain conditions are met. So I'll give you a very simple example. You all take Grab every day, right? Right? What is happening? Grab is basically the agreement between you and Grab, and then between Grab and the taxi driver, right? Think about blockchain if it was to come in, if there was smart contract. When I press on an app, and let it be another app, let's not call it Grab, I should be able to say, I want to go from here to there. It will show me all the trips that has been made for this and what the rate is. If I agree to it, it'll create a digital contract between me and the driver. And I'm taking it in a very simplest manner to day-to-day. It's a contract saying, if this person comes and takes me from here to there, I will owe that person $20 or $10 or $15, whatever the number is. And on the completion of it, that digital contract will automatically execute, transferring the money to him because I've received the service. So I don't need a middleman to do it. Grab is a middleman. Uber is a middleman. Airbnb is a middleman. So, or person, I should say, to be more correct, right? So I think we do not need any of the middle person trying to be the intermediary and broker of identity between 2 people. And MasterCard is realizing the same thing. And that if you really, SingPass is back, SingPass, which you all use, is run on MasterCard application. So they are moving away from saying, if we are the trusted broker of identity, how do I can use it for various things other than payments?
Thank you. Thanks, Sanjay. Rachel, just on probably a topic close to your heart, regulation. So kind of what is the difference between tokenized regulation in Singapore versus other jurisdictions?
So Singapore MES has been very forward thinking in this. So the way that Singapore has regulated for the tokenized industry actually is very tech agnostic. You'll see in some jurisdictions where they have specific distributed ledger technology. And I've worked on deals in some of those jurisdictions. And it's creating a lot of confusion for lawyers because they're like, there's a mismatch between traditional securities regulation and this new digital ledger technology regulation, and they're trying to find the harmonization between that, and obviously as lawyers, those will find the kind of arbitrage behind it. Singapore does not have that problem because the MES has just taken a substance over form approach. The tech to them is just an enabler. They don't regulate for just because it's tokens. What they look at is the substance of it. So in Singapore, it has when we put tokens on any of the exchanges, it has to be in the form of a security or a collective investment scheme. And as long as it fits in one of those two categories, which makes it a lot easier for everyone because, we're still at the stage where people still have more comfort understanding when something is a share or a debt instrument or a collective investment scheme instrument. And I think that's been a very useful way that the MES has approached this.
And Singapore is the home for 50% of the digital asset exchanges in the world right now, right? So someone told me we're a small family office in Singapore. I said there's nothing small in Singapore, though Singapore is small.